Welcome back to another episode of the Crypto Serpent. And I wanted to make something really, I've been meaning to do this actually for quite a while. And I want to do it for the new traders because I believe that these 13 things that I'm going to talk to you today are going to help you along the way. There's a lot of news, there's a lot of channels, there's a lot of information. You got TikTok, you got YouTube, you got all sorts of things, and sometimes it can lead people to make really bad mistakes. And what I hope that you get out of today is just a few little guides to help you along the way, because I hate personally seeing people lose money, especially when there are ways to prevent that from happening. So if you like the video, hit the like and subscribe button. I'm going to hopefully teach you a few things. Now, number one, when it comes to trading, especially when you're going to be trading pairs or even where this Forex or crypto, one of the key things that I see people doing is they start straight away with real money before starting with a paper trading. Now, for those of you that don't know what paper trading means, it means that you can trade with a demo account, same as everyone else, but you're on a demo version of your account, which means that you're not putting your money down. Now, I highly recommend that because you can start to see the emotions when money goes up, when money goes down. It's really important to really understand that emotional cycle, because this game is very emotional, and when the price goes up you feel like Superman, and when the price goes down you feel like shit. So start with demo. It's a really hot tip because I believe that this will help you a lot. Now, second is not using a stop loss. I mean, anyone that is a professional in this game will tell you that you need to have stop losses. Nobody knows what's going to happen. A bomb could drop tomorrow and make everything crash and burn. If you don't have a stop loss, you are in a bubble. Now, I know that with crypto there's high volatility, and sometimes having a stop loss could mean that you get traded out and then all of a sudden it goes to the moon. However, have stop losses in place, no matter where you put them, but make sure that there is a stop loss. I cannot stress this enough. It is a super important aspect of trading. Whether you own crypto or whether you are a day trader, have stop losses, please. Now, make sure that whichever broker you go with, I'm not going to recommend a particular broker here, but make sure that you're not paying too much for your fees. Especially as day traders, it can really hurt your business. Make sure to research, find the one that's good for you and that has the things that you wanted to have, but not the excessive brokerage fees. Now, this is a big one, and this is an important one as you go on your journey. Look at things as percentages, not as money, because when you look at percentages, you start to get a much better understanding of what's going on. If you have $50,000 and you make 10%, that's $5,000, and you might look at $5,000 like, whoa, it's $5,000 I've made, this is crazy. It's actually 10%. And so make sure that you're looking at profit and losses as percentages, not as currency, because it can really cloud your judgment. And often what happens is that people stop profits too soon because they're not seeing the percentages, and with losses they keep them running for too long. So it's a really interesting mindset, but make sure that you look at things as percentages, not as the actual currency itself. And one of the key things about why I'm making this today is that people don't do analysis. People don't even research what they're buying, and this is a really concern to me when it comes to TikTok, YouTubes, and all that people are just going off base of somebody messaging and saying, hey, I think this is a great idea, you should do it, or a 20-second TikTok video, as I've seen a lot of people do. You are responsible for your account, and you need to do the research. You need to read the white papers. You need to understand what's going on. If you don't do that yourself, no one's going to do it for you. And I need you guys to understand this important aspect. You cannot just go off somebody on YouTube or somebody off TikTok because they recommended it. You need to do your own research. It's really critical. And goes to my next point, which is, don't trade based on pump and dumps. Like, don't trade just based on one person or a couple of people saying something. Do your own research. We had the XRP pump, which then plummeted down at that Monday midnight as everybody was waiting for that to happen. That's a pump and dump situation. Don't trade on pump and dumps. Trade on fundamentals, and you will never go wrong. People don't maintain a journal, and I highly recommend that you do, so that you keep a record of what you're up to and where you're going, whether it's manual, paper, PC, wherever you want to do. Just make sure that you do, which is really important. The other aspect as well is to have a game plan. Now, I'm not going to, on this video, obviously run you through how to have a plan, but you need to have a plan, and that's really, really important. For me, if you don't plan, you plan to fail, and this is a really, really big one. And once again, sounds boring, but really the way to make money in this game is to be boring, is to be fundamental, is to be very accurate, is to plan ahead. And this is the game that you're in now. And if you're looking to do this professionally, or you're looking to do this as a day job, you need to become professional at it. Don't revenge trade, which means if you've lost, don't go out there and double the next one. This is very, very important, and it goes back to psychological. And being mentally strong is really, really critical in this game. So don't chase your losses is a really, really important one. And again, not calculating properly risk to reward ratio. How much are you willing to lose? And what does that gain? And is there a good risk to reward ratio? And if there isn't, just ask yourself, is this the best thing for me? We've seen Cardano go up a lot lately. Is that a good opportunity? Because it has substantially gone up and up and up and up. And what's the risk to reward ratio if I go in now at this price? And don't use margin trading tools too soon, because you can really lose a lot of money once you understand what you're doing. And once again, and you understand your risk to reward ratios, then this could be quite a good option. But again, not too early. And the other thing as well is not to have too many pairs, not to own too many coins, not to trade too many coins. It's hard enough keeping up as it is with, 5 or 6. But if you start to trade too much on too many things, you won't be able to keep up with what's going on in the market. And most likely you either take profit too soon, or you won't see something coming and you'll have a huge loss. And the other thing as well is, find your own style, find your own method, and then stick with that. Don't try many different methods, and many different traders trade in different styles. Find your own, stick to that, stick to the fundamentals, and you will go far. A little bit longer than my usual videos, but I hope it helped you. And if you're new, hit the like and subscribe button. And if you learned something today, much appreciated, and I look forward to see you on the next one.